Today in crypto, another legendary investor makes a very simple pitch to investors. Buy Bitcoin now. He said that at the current prices, any investor without Bitcoin in their portfolio needs to get some exposure. This is massive. Yet another big time investor talking about Bitcoin. And this comes at the same time that a report has just come out saying that family offices are buying big time into Bitcoin. No wonder the price has been soaring recently. My name is Lark, and this is where you subscribe for all of the hottest and all of the latest happening out here in the wild land of crypto. Also, for all of the traders out there, you can get up to a $120 Bitcoin trading bonus and 10% off on your fees over on Femex if you sign up using the link down below in the description. Now, Femex is an excellent exchange for traders with a great range of different cryptocurrencies on offer, including all the big stuff like Bitcoin and Ethereum, but a great range of altcoins as well. Chainlink, Cardano, Tezos, even gold. You can trade gold over there. Much more beyond that, of course, as well. You can trade both spot markets and futures markets over on Femex, all with deep liquidity and a super user-friendly interface. So again, click on the link down below if you want to check that out. So let's talk about Bitcoin. It has been a just wacky and wild weekend for Bitcoin. After getting rejected within just a few dollars of $16,000 on Friday, Bitcoin corrected by more than 10% on Sunday. But we have since recovered and are now forming an area of support around $15,400. Now, we could easily come back down here to test some of those key areas of support for Bitcoin, especially after such just an aggressive run up in the price and with the greed sentiment remaining very high, as you can see here on the Bitcoin Fear and Greed Index. But now we need to watch and we need to wait to see what kind of new pattern Bitcoin starts forming up here. But the bias still remains strongly for the bull case on the higher time frames. The weekly close for Bitcoin was a very, very strong close this week. In fact, it was the third highest weekly close ever for Bitcoin. And this is at the start of a new bull cycle. The last time it happened was at the blow off top at the end of the cycle. So that's pretty amazing to see. Also, it's not just Bitcoin. Ethereum has also been having just an amazing run recently. So Ethereum actually had its highest weekly close since mid-2018 this week. Looking over at the daily on Ethereum, we're actually coiling up right now inside of this triangle with an implied breakout target of around $600. Now we could come back down to test support again around $400. So that's the blue line at the bottom here you can see. But if we do close above $465, then we could very quickly move up to those higher price targets. With ETH 2.0 coming so soon, I would not be overly surprised to see such a breakout happening in the coming couple of weeks. Now, taking a look at Chainlink real quick, we can see that Chainlink bounced off of the 50-day moving average. That's the orange line on the chart here, acting as just a nice area. We came back down. We retested after that initial breakout. This is a technically quite bullish move. And if Bitcoin behaves, then we could see Chainlink heading back up to test the area of resistance around $16 in the short term. However, we are in a rising channel, and if you're looking to open up a long on Chainlink, then option one is to wait for a breakout past resistance, which is the top of the blue line, or to wait for a pullback and a test of support around $11 before going long. So altcoins definitely looking good as well. Obviously, Bitcoin's been taking a lot of the attention recently, but I think the big story of the last few days is that DeFi is not dead. Of course it's not dead. In fact, the blue chip DeFi protocols, so-called blue chip anyway, they are up big time. Aave's up 75%, Synthetics is up 50%, Thorchain is up around 50%, Yearn Finance is up like 35%, and a lot of others, 15-20% gains. So DeFi came back really strong. And in addition to the old DeFi players who keep really just moving from strength to strength, that their platforms grow and They keep releasing new technology. We also have a whole new wave of new DeFi projects launching these days. We've had a lot of great ones recently. APY Finance, Polkastarter, Bonded Finance is coming really soon. Here's another one to add to the list. It's called Open DeFi. Now this is another one that I'm investing in. Now Open DeFi is tokenizing real world assets, all of which are 100% insured. So they're working with gold and silver. That's going to be offered early on, among other assets you might see come later. You will even be able to stake your assets to receive an instant loan against that asset. You can also earn a yield on your real world assets via their platform. I quite like this because obviously a lot of people are doing gold, which is cool. But silver, it's super popular among investors, but it's massively underrepresented in the crypto space. So it's good to see someone finally bringing that to the table to offer that. But what's really interesting is that Open DeFi is based on the Matic network, which reinforces to me the thesis that Matic is the #1 layer 2 scaling solution for Ethereum without a doubt. Open DeFi is going to be listing their token on Uniswap on November 11th, so it's one to keep an eye out for if it is something that you're interested in. Obviously, you have to DYOR on this, guys. I'm just mentioning it here really quick, but go check it out if you think it sounds interesting to you. It's going to be a mega small market cap when it lists, so it could be a good chance to get in on the ground floor of a new DeFi protocol. Now, as an example, EasyFi, which is a Matic-based lending protocol, has just exploded in price recently. So who knows if Open DeFi is going to do the same, but it proves that Matic DeFi is popular right now. So it's tapping into all the right trends, DeFi, layer 2, all that good stuff. Oh, and they're also working with Tezos. They've actually launched the first gold and the first silver tokens on the Tezos blockchain. So that is pretty gosh darn cool. And speaking of Tezos, it's our next topic. Swiss bank Signum has become the world's first regulated entity to launch a staking service for a major cryptocurrency. Of course, that cryptocurrency is Tezos, right? The bank is going to be providing custody, trading, credit, and staking services for the Tezos cryptocurrency. And it's obviously a very big step, a big first for banks in what has been a few weeks of just big announcements from banks. And I imagine we're going to see a lot of other banks offering staking as a service to their customers for a whole range of different cryptocurrencies. We'll see Polkadot, we'll see Cosmos, and especially Ethereum, obviously when 2.0 goes live. That's going to be available at a lot of banks. So pretty interesting to see that happening. Moving on now, the Grayscale Bitcoin Trust is outperforming gold exchange traded funds, a trend likely driven by family offices, at least according to a report by JP Morgan. Now, I've been closely documenting the rise of the institutional investor here on the channel for, it seems like forever now, but they're here, they're coming, and more money is coming in all the time. But while we often talk about hedge funds and companies, the family offices, they are a damn big deal too, and they don't get nearly enough attention. So it's pretty interesting to see them mentioned in this report. Now, in total, family offices control around $6 trillion in wealth. If the world's family offices were to make just a 1%, it's a 1% allocation into Bitcoin, that would be $60 billion. Fidelity is saying that a 5% allocation is preferable. Let's just stick to the 1% thesis. Keep it, keep it chill. So today, $60 billion would buy around 20% of the total supply of Bitcoin, approximately 3.6 million BTC. But there's one big problem here with that equation. There's only 2.5 million Bitcoin on exchanges right now. 4 to 6 million Bitcoin has been lost forever. Most of the Bitcoin is in the hands of hodlers who are not going to give it up cheaply. The only logical assumption is that family offices need to FOMO in sooner than later to beat the other family offices to the party, and really just everyone else to the party. The moon is coming soon, and just this one category of investor is unable to invest 1% of their assets into Bitcoin without causing a significant price spike to happen. And if we take a look at the other groups that could potentially put their money into Bitcoin, you will quickly understand the insane scarcity that we are looking at and how quickly the price can move higher. Non-financial companies like Apple and Microsoft, just in the USA, are sitting on around $4 trillion in cash. They're facing powerful inflationary forces. Up to 5 to 10% has been predicted over the next few years. Interest rates super low, potentially going to go negative. Some of that money is going to flow into Bitcoin. Square and MicroStrategy, they led the way. Other companies are going to follow. A 1% allocation from U.S. companies alone, that would be $40 billion. About 15% of the current market cap Bitcoin. Hedge funds control around $3 trillion in assets. A 1% allocation from them would be around 30 billion. So again, just, insane amounts of money there. Retail investors obviously are coming in too, competing to get their piece of the pie before the big money crowd gobbles it all up. And it has never been easier for retail to buy Bitcoin, thanks to PayPal now offering Bitcoin to 346 million frickin' people. And the signal to buy Bitcoin, to go out, to have this asset be social proofed, has never been stronger to the investor crowd. Buy Bitcoin and do it sooner than later. Earlier this year, Paul Tudor Jones sent up the first big signal, totally bullish on Bitcoin. Then we had George Ball come in. He's the former CEO of Prudential, one of the world's largest asset management firms. He said, buy Bitcoin, guys. And now we have veteran investor Bill Miller saying to buy Bitcoin over on CNBC. Now, he had some really interesting things to say, so let's just have a quick listen from some of the key points of what he said here.
Some of the great investors of our time, Stan Druckenmiller, Paul Tudor Jones, are gold bulls, and many people are, if they're not gold bulls, they at least believe that that inflation is it's possible inflation comes back with the Fed trying to gun the money supply, or actually gunning the money supply here, and with great fiscal stimulus or more fiscal stimulus. I think it's reasonable to own gold. Gold's done very well this year. I think silver's a better bet than gold. It's a higher beta version of gold, and the gold-silver ratio would tell you want to own silver. But I think, with respect to Bitcoin, I just make a little emendation to what you said, Kelly, which is that it's been a great month for Bitcoin, but it's also been a great year to date, 3 years, 5 years, and 10 years. And then Bitcoin's inception was 12 years ago. And it's been the single best performing asset category in every one of those periods. So not that it hasn't had a bad time of it. It went from nearly 20,000 down to in the $3,000 to $4,000 range. So it's been very volatile. But I think right now that its staying power gets better every day. I think the risks of Bitcoin going to zero are much lower than they've ever been before. And you're getting greater adoption. I mean, MicroStrategy put half their cash, $400 million, into Bitcoin. PayPal announced that they're going to make Bitcoin. People can buy Bitcoin, and you can use it. You can use it at all their vendors. Square had a blowout numbers yesterday, due to the sales and the demand for Bitcoin. And the Bitcoin story is very easy, which is that it's supply demand, it's economics, not 101, but 0.01, which is that the Bitcoin's supply is growing around 2.5% a year, and the demand is growing faster than that, and there's going to be a fixed number of them. So I think every major bank, every major investment bank, every major high net worth firm is going to eventually have some exposure to Bitcoin or what's like it, which is gold or some kind of commodities. I did see a thing that the chief investment officer of Brown University, endowments tend to move slowly out there, and I'm on the investment committee at Johns Hopkins, and it's we have a great CIO. But we don't own any Bitcoin, and we may never own Bitcoin. But what she said was that she thought that because of its asymmetric properties, that everybody is going to want to own at least some Bitcoin. So I think that's for a college endowment, that's a bold statement. I would say if people don't have exposure, I'd say if people don't have exposure to Bitcoin, I would strongly recommend that at current prices that they do that.
Wow, this just it absolutely cements the theory that big money is paying attention to Bitcoin in a very, very serious way, and that they are racing for exposure to this asset class. All of the increased exposure from hedge funds and family offices and companies and retail investors and everybody else trying to get their little piece of the pie here. This is why Bitcoin is up 109% this year, and it's just getting started, guys. $100,000. That is not a crazy number when you see who's investing, how much money they have. It's just math, guys. It's inevitable. Anyway, your question for today. Would you stake your cryptocurrency at your bank? Do you think that such services will actually become popular with more banks in the future and that'll be kind of become like a standardized service? Or is it just going to be one of those kind of like isolated things like neobanks do, but like the old guys don't really do? Let me know down below in the comments section. Thank you so much for watching today's video. Long live the blockchain, and peace out till next time.